My last look at AI stocks buying levels early September had some of the must-own AI stocks trading at ridiculously high valuations. For instance, Amazon was trading on an EC indicator of 148 against a target maximum of 100, which prompted me to hit the sell button on over 50% of my holdings, despite the promise of huge gains in revenues as the pandemic sales and profits come in. What are buying levels? Basically, buying levels are high probability technical levels that a stock could trade down to during a correction, i.e. it's an achievable technical chart level that could be used, for instance, to put in a buy limit orders at just above the buying level if one is looking to accumulate more stock in any particular corporation, i.e. the buying level for Google Alphabet was $1,395, so a limit order at $1,395 or higher would be the objective, depending on how eager one is to gain exposure to the stock. i.e. if I really wanted to buy more Google, then the limit order would be over $1,400, as stocks tend to find support at round numbers. Stocks expensive or cheap indicator, EC indicator. This basically condenses down some 12 financial indicators I track for most stocks to determine if they are expensive or cheap, as stock prices are usually not a good indicator of value on their own. At its most basic, the higher the number, the more expensive a stock is, and conversely, the lower the number, the cheaper a stock is, where a reading of 20 to 60 tends to be the sweet spot for most AI stocks, as it implies earnings growth coupled with sustainable speculative interest, and thus results in good trending charts with support during corrections, where value tends to be fair so as to enable one to accumulate stock. Whilst readings above 60 increasingly indicate high levels of speculative interest in future earnings growth. However, this does not automatically mean that a stock trading over 60 should not be bought or sold. It just means that there is a lot of speculative interest in that stock, so expect greater price volatility as investors are more likely to react to news events. So I would still invest in stocks trading over 60 if they have a good reason to justify such speculative interest, i.e. such as AMD and Nvidia as being higher risk stocks, or Amazon of say 6 months ago that was set to greatly profit from COVID-19 lockdowns. Whilst a reading of over 100 is where stocks are becoming a bit too hot to handle, where holding, let alone buying, depends on understanding what's in the pipeline. What is it that's driving the stocks into the stratospheric valuations, such as AMD, first killing Intel and now giving Nvidia a good run for its money with its 6000 series GPUs? Whilst there will be some, such as Amazon, that I can't quite fathom the high valuations for, hence reduce my exposure to. And readings under 20 suggest little speculative interest to drive stock prices significantly higher, so likely to expect trading ranges, and thus tend to be sleeping giants in the AI megatrend sector. Also could be signaling problems with the stocks, i.e. such as Intel badly losing the CPU war to AMD, which has made Intel a disliked stock to hold, whilst AMD is being heavily bid up into fever, making it an expensive one to buy. Again, the whole of this extensive analysis has already first been made available to patrons who support my work. So, for immediate first access to all of my analysis and trend forecasts, then do consider becoming a patron by supporting my work for just $3 per month. And just an example, what do you think my forecast was for where the Dow would end 2020 right at the beginning of 2020? Guess. 30,750 to 31,000. Where is it trading now? Go and have a look at the chart and make up your mind whether you should subscribe, become a patron for just $3 per month. Anyway, I'm going to say Merry Christmas and a Happy New Year to all. And here's a Christmas message for my budgies. And do consider becoming a patron, because there's going to be a lot more opportunity during 2021, 2022 and beyond.